joining in. I was looking at this data for Kotak Mahindra Bank on the NSE right now. There are 26.6 lakh sell orders that are still pending at the lower circuit level, and some 15 lakh odd buy orders as well. Some 4 crore shares have been traded so far, and 60% of them have been marked for delivery so far. So Kotak Mahindra Bank there 10% lower at 1660 as of now, 52-week low there for the lender. But let's take this discussion forward, and Gurmeet Chadha, managing partner and CIO at Complete Circle, is joining in to take some questions. Gurmeet, good morning. Thanks a lot for joining in. This slew of regulatory actions against these financial institutions is continuing from the RBI, and this time it's a large bank to the scale of Kotak Mahindra Bank. What do you see as the implication for a bank like Kotak? Because this has happened with HDFC Bank before. It took some 15 months to resolve. How long an overhang do you think this remains with Kotak Mahindra Bank?
No, it's quite surprising, when you have institutions like Kotak getting, almost reprimanded. The words are very strong. They have highlighted some 5 areas also. If you see the RBI notification, it's related to IT inventory. It's related to, onboarding. It's related to user access. It's also related to data security. So they've clearly highlighted, and I think when they said that they're not satisfied, is what Ritu also mentioned. With the 2 years of engagement with the bank. I think the message to all banks is now very clear that the digital infrastructure and data security, RBI won't compromise. I've worked in Citibank. I've seen this, MNC banks getting fined by the regulators in billions of dollars. I think India probably we are seeing now. I think that also tells you that the way forward is digital. So any compromise there is not acceptable. And it's bad news for the bank. They've been struggling for last 2 years with, first there was a stake issue, where they had, they wanted Uday Kotak to reduce stake. Then there was succession issues. RBI wasn't really keen on internal candidate, and then the new guy came in, and now this. So it's back-to-back bad news. And what it usually does in these cases is it leads to everybody was expecting again a re-rating with the new management, new team, new CEO. It puts it back, and banks like HDFC, Kotak were commanding 4-5 book multiple for a certain growth, for a certain premium, pristine asset quality, and for high compliance. I think that gets challenged, and you will possibly see some rotation happening now because you probably will get similar growth at probably much lower valuations.
You spoke about issues. I was just looking at a longer-term chart of Kotak Mahindra Bank. If you look at a 5-year chart, the stock has been absolutely trapped in a range, barring 2022 when it kind of broke out of that range for a brief period. But otherwise, the high of that range has been about 1950, thereabouts, 2000 at the top. And the lower end of the range has been around, 1500 thereabouts. So it's been in this 500 point or 500 rupee band for the better part of the last 5 years, Kotak Mahindra Bank. So from a wealth creation perspective, yes, people will argue that perhaps it has disappointed. Just to go back, Gurmeet, hi, great to have you on this discussion. I just want to go back and highlight what some of the numbers that the brokers are throwing up. And let's just repeat that for the benefit of our viewers. Now, Citi's sort of numbers say that in the third quarter, 95% of the new personal loans and 99% of the new credit cards were disbursed digitally. I mean, that's the importance of the digital medium. 90% of new investments and 76% of FD and RD accounts were opened digitally. So it's just telling us that incrementally the new business is coming through the digital channels, though as a part of the overall pie, and that's the CLSA number that I'll now quote, the 811 platform, that is Kotak's digital platform, that is only 8% of its total savings deposit base. But the question is, incrementally, digital is the way to grow the business, and that's where the doors have been shut down by the Reserve Bank of India till compliances are in place. So given this, do you expect, Gurmeet, that the worst of the reaction is played out today? Or should we be prepared for, a longer derating?
Price action will probably play out in a couple of days. Cycles have shortened. We've seen that with so many cases, even related to IT searches, even related to other regulatory actions. The price action plays out in a couple of days. It's the long-term impact, right? So if you see financial impact is limited, cards is just 4% of the overall loan mix. If you see the bulk of the book is home loan and LAP, which is 27%. Corporate loan book is 24%. If you combine agriculture and SME, that's another 14-15%. And then you have consumer banking, PL and all, which is another 6-7%. So it's a very diversified loan mix. And I don't see any financial impact on, immediately. It could be marginal. What it does is on the liability side, as you rightly pointed out, they've been just adding like 70, 80 branches a year. versus let's say ICICI adding 400 odd, HDFC is actually adding 700-800 branches a year. So the medium has been more digital. So and your price book multiple or rating for the bank is on growth and asset quality. No stress on asset quality, but that growth gets compromised. Yeah, already you are seeing pressure on names. Already the cost of funds are going up. Their CASA ratio has dropped from almost, if I remember correctly, 56, 57% to 48%. So if your onboarding goes down, so the impact is more on liability side also. We always focus on the asset side. And right now the war is on liability side, which is what we are seeing with even with HDFC. So I think you will see some more derating in my view and possibly some more time correction because the outcome and the remediation will take time. HDFC took almost 12, 18 months. And we've seen what has happened to HDFC last 3 years. So I think the template is pretty similar. And Kotak is very well owned by a lot of domestic institutions. So that ownership also is likely to see, unfortunately, some reduction.
Absolutely, Gurmeet, you hit the nail on the head because this is coming at a time when the market was just trying to prepare itself and, giving that hope that maybe the private sector banking rally will finally play out, the big catch-up move. So that's my question really. Maybe earlier, 2-3 years ago, you could take a simplistic view saying, okay, so Kotak is dealing with this regulatory issue. Logically speaking, money is going to start flowing to an ICICI bank. But now looking at the way the regulator is going after anyone and everyone, NBFCs, big banks, small banks, PSU, private sector, I don't know if someone can take that simplistic call. So overall, on large cap banks, where do you see the money going and what's the advice?
See, I think the only answer, the biggest risk in finance is regulatory risk, right? We've seen that. Who would have thought Kotak lower circuit? We saw HDFC reacting so negatively after Q3 numbers. I've not seen those kind of reactions in these stocks for a very long time. So I think the best answer is diversification. Have a basket, avoid concentration here. Second, I see the money moving towards Axis and maybe ICICI and maybe HDFC. HDFC has shown some progress this quarter of stabilizing at least, right? And if they can show another quarter where they're garnering almost 25% of the incremental deposits of the industry. So some money can go in there. And also PSU banks, why not? I mean, we are seeing, but one message to all banks is clear. Kotak makes 3,000 crore quarterly PAT. HDFC does 17,000 crore quarterly PAT. Just look at the IT spend, Surbi. It's quite low. Such a great team. I'm sure it's a great institution. A lot of respect for Uday Kotak. I think it will make a comeback. But I think the banks also need to introspect the kind of IT budgets they have. Look at the outages in most banks. Look at HDFC, even Axis, despite good numbers being reported. I think this has to be taken very seriously, in my view. I think the IT budgets and the digital budgets will see a significant jump, in my view, in this entire sector. And it's called for. My sense is rotation would be more towards Axis, ICICI and HDFC if there's more, progress there. And some of the tier 2 banks as well, like Federal, RBL. So I would be carefully watching out there. So,
Gurmeet, I just want to point out over there, what you said is very interesting. Yesterday, I was looking at the whole string of tweets doing the rounds, or posts as they're now called, doing the rounds. And Hormaz, one of the sort of, people online posted saying, okay, so does it mean bigger contracts for TCS? And look at what Gurmeet is saying. Maybe, we're so hell-bent on saying, North America BFSI revenue is very lukewarm and all. Maybe it'll be all about the India IT spends in India BFSI revenue from here on.
Maybe India might just end up becoming the biggest business for these IT companies compared to North America. But Gurmeet Chadha, pleasure as always for joining in. Thanks a lot for taking time out and sharing your thoughts on this subject. That was Gurmeet Chadha of Complete Circle. In fact,